Pedro, I think we should start. What do you think?
Yes, we're going live now. So I just want to make sure I've sent that, then we'll start immediately. All right, so we are live. Hello, everybody. Welcome to the fifth session of our Hero Masterclass series. Today we are going to, well, on this section, money matters, budgeting and financial planning, and being investor ready. And today we have my very own boss, Fiyin Ogunlesi, taking the stage. I'm super excited for this section, to be honest, because she's a very brilliant person. I'm going to read her bio, but I'm just going to say from my own personal experience too. And very, very, very brilliant, very problem solving, very financial, like witty. So it's really nice to see that she'll be taking us today, learning firsthand, and I'm really glad that everybody here is going to join us. So I'm going to be in our bio now. Give me a moment to share my screen. All right, so I'll be sharing my screen now. All right, I believe we're all seeing my screen. So yes. Fiyin Ogunlesi is an investment professional and the founder of RegalStone Capital, an investment and advisory firm delivering strategic capital solutions to high-growth businesses across Africa. With over a decade of experience across investment management, fund accounting, and corporate finance, she's driven by a deep commitment to value creation, catalytic investing, and building sustainable wealth across the continent. Before founding RegalStone Capital, Finn served as the managing principal at TAG by We Capital, where she led initiatives supporting African businesses and creatives through investment advisory, corporate finance, and fundraising. She also held the dual role of principal and chief of staff at We Capital, working across fund management, investment relations, and portfolio support to help scale early-stage ventures and strengthen investor engagement. Finn began her career in Nigerian pension fund industry, managing assets within a multi-million dollar fund structure. Beyond her core investment work, she mentors founders and contributes to global innovation platforms, championing capital as a tool for long-term economic transformation in Africa. Now that is been Ogunesi. Please, a round of applause, a round of applause. Hearts, celebration, just anything at all. Let's celebrate her. Thank you, thank you, thank you.
Thank you.
I want you to be very serious in this session. Please have your notes ready. Have every question you want to ask. Remember, you can ask it in the comment section. Let us begin. Over to you, Lee. Thank you.
Thank you so much, Pedro. Thank you for the warm intro. So just use the chat box this afternoon a lot. So again, this is me assuming everybody's in Lagos. So good afternoon, good morning, good evening. If you have your notes, it's a good time to have your notes by your side. I know creatives and money matters. Again, money matters generally is important, right? But creative and money matters sometimes can be at loggerheads. Today we're trying to, as much as possible, to be clear, to be simple tips that you can use starting from today. Um, Adriel, if you're able to share my slide already, so that we can kick off. Or let's use the chat room. This where are you calling in from? Let's interact. There'll be. I want to be able to ask questions and ask um, to know what kind of businesses are in the room as well. So if you could already drop that in the chat box, that would be helpful. So like again, not much. Adrian has done a good intro. Had 10 plus, 14 plus years career in financial services, just doing supporting businesses across different forms. I'm excited to be here this afternoon. So next slide, please. I'm unable to share from my side. But yeah, I know we can do this. So again, the crux of this boot camp, because it was birthed out of how do we shift creative mindsets, right? How do we shift it to being more structured? How do we shift it to, again, structure is a word that I feel like has been overused, but again, we're going to use it today again, so pardon us or pardon me. And this session in this bootcamp exists for this, right? As a creative, you're on the left side, you have passion for your work, you have love for your work. It's something that you do gives you joy, right? You feel fulfilled. And so from passion to profit, how do we get there? How do we get to financial clarity that still gives you creative freedom? You want to be in a state of mind as a business or as an individual where you are able to live your dreams, right? And not just wear the title or the hat of creatives don't have money. Many creatives are talented. That's why you're creative in the first place. But of course, you're financially stretched sometimes. Money comes in, it comes in bulk sometimes, and then you have months of silence or weeks of silence, and then there's like anxiety. And so this session, again, is packed in three forms: budgeting, financial planning, and just getting investor ready. Again, this session should be three different sessions, just again putting out information that helps you. But we sort of crashed it into one, and hopefully we are able to touch on different parts. So please just use the chat box. Let's ask questions as we go along. As we go along this call, pricing can sometimes feel emotional, which is the second point I put here, not strategic. We want to do things because, oh, this person likes my work, or you don't believe that your work is worth a certain amount. Hopefully on this session, we're able to shift your mindset from that, right? Start to value your work, see it with higher value. Money management is often learned too late, and you've made financial mistakes. You've made personal financial mistakes and also company mistakes that don't get you where you want to be. And then at retirement, 60 plus or whatnot, right? You're wondering where all the money went and why things are still so tough, right? So again, I'll be merging all of my own life experiences from working in the retirement planning industry, also again working in the private capital markets where we're working with SMEs and startups, and then of course investor relation experience to just share as to how to navigate this going forward. Of course, again, we're all still learning, but yeah, I hope that we can make the most of this session. So this is a session to shift your mindset from it's just all love, we want to make money out of it. Next slide. So again, my session I've split it into four, maybe three. The first one is just the general financial housekeeping and budgeting. And then we'll move on to how to value your work and how to price for profits. And it's sustainable. And then we'll talk about how to become investor ready, which is key. We want to see more businesses evolve out of this process. We want to move from self-employed to more creative businesses, more production companies, more media companies, more academies, more labels. Just we want to see more creative houses out of this, no longer self-employed. And then the last one will be, out of three options, pick one experiment in terms of the financial health for yourself or for your company that you would make sure you do within the next 30 days. So again, as much as possible, I try to make this practical so that you have good takeaways this afternoon. Next slide. So the first one, again, still on, I've sort of spoken on this, but it's that mindset shift, right? How do we move from creator to business owner thinking? I think it's important because, again, you might be thinking, why can't I just be the only one? Self-employed, I paint, I do my things, people pay me more money, I move on, right? There's a key man risk there, right? I just want to create. Prices feel personal, right? I don't have any children now. I don't have any responsibility. I don't have any, I'm not paying anybody's fees, no dependents, right? Money is just stressful to talk about. I want to take it slow. But it's not sustainable, especially in a country where inflation is high. It's just volatile across different forms, whether it's food prices, whether it's fuel prices, whether it is just livelihood, rent, all of the daily. So you need to start to think, oh, how do I make this sustainable? How can I sleep better at night? How do I really have financial freedom for myself and for my business, right? You don't need to be an accountant to be able to do that. You just need to be more financially intentional. Um, and then as you're thinking about it, it makes sense to have it in a company structure. Think about it as a business owner, whether you're a business owner for your own self-employed state or thinking of setting up a company, right? We started this boot camp with a lawyer's perspective, walking us through how to think about a corporation, what to register for, how to just, again, put us in the mindset of you are now a business, right? And so that's important. This must sustain me is how we should start thinking about. My prices need to be strategic. They need to cover certain bases of my life that I ensure that I'm still able to authentically dig out some more creativity. Because again, with joy comes with less anxiety comes more creativity, right? And money is information, money is power. And that's what I'm hoping that at the end of this session, we are all able to take away from. So the next one, we're kicking off with financial housekeeping. And again, for financial housekeeping, it is really how are you thinking about it personally, right? And then we walk up to your business. Because I've sort of merged this in a way because I think that most creatives on the call and most creative typically always start from themselves. I'm self-employed, it's me. Everything is about me. I'm the artist, I make music, or I'm the fashion designer. Everything is just about me. And so you can't grow what you don't track, right? If you want to evolve to from just Fiyin to Fiyin Limited, right? We need to start to think about these things. So this is, I want us to be active in the chat room now. Hopefully everybody is, the network is aligned and we can all hear me. Can you just put examples of income sources? What do you earn? You're an artist, visual artist, musician, fashion. How do you earn, right? Is it direct sales? Do you make commissions? How does it work? Let's use the chart. I want to get the sense of what's happening, the kind of people that are in the room, so that we are all aligned. Direct sales, okay. Put examples, your sales, or you really rely on grants. You apply for different stuff. That's when you are able to earn money. If you don't win the grants, you don't make money. How do you make money? Christabel says direct sales. Thank you, Christabel. Any other person able to share? Grants, okay, combination, grants, awards, direct sales. Okay. This is the typical scenario for most creatives, right? Commissions, okay. Commissions, mostly professional fees. Okay. Thank you for sharing that, Akiyemi. So yes, again, you need to, but first thing first, understand your income sources, right? Is it direct sales? You want to have direct sales. There are different ways. You want to have commissions. So typically commissions are like project-based, right? But you want to be able to put yourself in a position where commissions are sustainable, they are repeatable. Grants are typically not because you are relying, you are not in control of the outcomes, right? You have to wait for them to put out the application. You have to wait for them to give you feedback out of 2,000 plus or 200,000 plus and hope that your talent, again, is the one that makes you shine. You want to have your income sources in a way that is repeatable, you're in control of the outcome. So direct sales, commissions, whatever the name is, you want to start to lean towards the professional fees. Yes, some things you can control. The next thing to think about is just expenses category. And I want us to, again, if you have a note beside you, this is a good time, right? What are my expenses? Materials, the people I pay, labor, the tools. Do I need canvases? Where do I buy them from? The paper, the paints, the sewing machine. If I'm an interior designer, the woodwork, right? Do I use artisans? Am I a designer or am I a maker, right? The rents, the logistics around it. How do you navigate this? These are things that you start to take note of and write down. It helps you as you move on and start to think about your financials. So it's not a situation where you don't understand what's happening in your bank account. Those that sort of joined me on the business clinic that we had over the past months, sort of we've touched on some of these things. And again, there's a bit more clarity there. But for every other person, we need to do this as I go along. Timing also matters, right? There's something called time value of money, right? It sounds technical, but it isn't. It's really around 100,000 today is different from 100,000 that you received in 2015, right? Because maybe in 2015, dollar was still 300 to the dollar, right? Or 360 to the dollar. And then in 2026, it is 1.5 to the dollar. So the value is different. So timing matters for when you receive cash, whether you receive it at the start of the project or you receive it at the end of the project. If you're receiving it at the end of the project, it might mean that you have to go and source funding from somewhere to be able to execute the project. Is the funding cheap enough, right? Was it a loan? Is it cheap enough that it still helps you make profits from it? So when cash is received, how cash is spent are key things that you must hold on to, because those things can affect the livelihood of your business and again, just your daily personal financial housekeeping. Next slide. So my next slide is how to think about the income and expense audits, right? Now that we're again making it practical as much as possible, again, you want to answer these three questions as we're on the call. What did money come in from over the last 3 months? So let's use the chat box. I want us to be active. What the money coming from? Is it what did you get more grants? Did you get more professional fees? Did you get direct sales from artwork? To be good to know the different kind of creative businesses or people that we have, professionals we have in the room. What the money coming from? Few commissions, right? Are you in the music space? Are you in fashion sales? Okay, direct sales. I know Michael is in visual arts and crafts. What the money go out for, right? Was it really logistics? Was it payroll? Visual arts, okay. Okay, Peter is visual arts as well. Okay, few commissions. So when you say commissions, Peter, do you mean there was somebody gave you a project to execute and then you then made it and made money? Logistics, okay. What did money go out for? What did money go out for? And have you observed what happens every month, right? You have sales every month. Over the last 3 months, January, February, March, what have you had sales every single month? What repeats? Commission for a series of paintings. Okay, thank you for that. Yes, commission for a series of paintings. Okay. So I'm assuming this is a project-based transaction, is one-off, right? Did it happen every month this year? We've had 3 months, or the third month. Does it repeat monthly? That's where I want us to land. Does this happen monthly or it's per project, right? It's one-off. You want to be able to get to a point where you understand how you make money. And that's the first part of auditors. When you hear audit and audits, audit is really simply around the money you made, money that was spent, right? How does it reoccur? Just understanding basically this, right? And this is the framework you should think about all the time. So because we don't have a lot of time, I will just move on quickly. My next slide is around, and they all link, right? It's around how to think about projects, because what I've seen is with the creatives, they are mostly commissions, like Peter has shared, projects, right? And when you're thinking about projects, it makes sense to think about it. I'll just quickly go through this slide, but I have a calculation that I want us to adopt down the line, right? So if you're thinking about projects, I think the formula is simply materials that you most likely know this, but those that don't, that just emerging in the space, you want to compute the materials, the value of the paintings, the fabric, the wood, the finishing, the payroll, the humans you will use, the studio time, the production time and whatever it is, right? Space you will use, if you are filming, the houses that you will have to rent, those are materials, right? Plus your time, plus overhead, studio rent, electricity, transport, admin, those give you your true cost. The bone of contention most times is always around time, your labor time. You want to put a price on it. on a number of hours. Yeah, I put you can benchmark with a conventional industry compensation package. So I'm speaking to somebody that is an artist. Maybe you benchmark yourself, your years of experience with somebody that has just finished school and gotten into the work environment, for example. We'll still deep dive on how to complete this properly down the line. But you've just gotten into the work environment, maybe you benchmark with a bank, maybe they pay entry-level staff or trainee 300,000 every month. We have 22 actual working days in a month. You can do that division. And then we come to a certain amount that is paid per day. Okay, typically you work maybe 8 hours a day, right? You can divide it again. It comes to maybe about 1,500 or 2,000. It's okay. So 2,000 per hour. If I want to execute this project, I want to sew these clothes, right? It might not all work. This framework might not work for every kind of creative, but it's useful to have it at the back of your mind. Once you have it at the back of your mind, you help to price better. You price your services better. And then you think, okay, if it's 2,000 per hour, right? And I'm spending 30 hours on this, right? So 2,000 times 30 hours. Okay, maybe this is the amount I should put for my time as my professional fees, besides materials and overhead for this project, right? Sometimes you can have a good margin, a good spread that marks it up. Please, if you understand or you are with me, please yes use the react button, thumbs up, whatever it is, if you understand, so that I'm sure that this is resonating with people in the room. Thank you. Okay. Well, again, there's a calculator I have much later that will deep dive on it. And so this leads me to how to think about budgeting for whether it's a business and just for your personal life, right? The next slide. If you're thinking about budgeting, you want to adopt a 50, 30, 20 rule of thumb, right? 50% for production and delivery costs, 30% for personal income and lifestyle, right? And this is really around you as a creative, still being self-employed, where everything still revolves around you. It's not yet a company where you are paying yourself a salary. When it becomes a company, you want to be able to pay yourself a salary so that company business is separate from your lifestyle. But if it's still all around you today, you want to have this framework for budgeting as well. Besides any project-based framework, this is useful for you, especially if your kind of service is, for example, if you're a fashion person, right? Maybe you are sourcing the material for the person, or maybe the person brings the material to you. Things like production and delivery costs is in the light you need to execute, the number of man hours that will take into consideration to execute the dresses or the outfits. You want to also consider the fact that you have a personal income and lifestyle. So I always advise that you put a margin for it, realistically based on the skills that you have and the kind of customer that you have, right? You cannot charge those in Ikoyi the same price as you charge somebody that is in Ogba or Abulegba, right? If you are based in Lagos. So you need to be able to factor that in and then think about 20% for reinvestment, because as a creative, you want to have a sustainable livelihood. So that 20% is out of what I've charged 50K to this client, 10K will go into reinvesting into this business and making it scale or whatnot, or even reinvesting into myself, maybe having an investment account and growing that. So again, I put here just a quote, the percentages can change, right? They are flexible, you can flex around with them. But reinvestment is non-negotiable. You must have minimum, it can be more, right? If you're very financially intentional or conscious of this, right? It can be more, but it shouldn't go below 20%, the amount that you invest or you keep as a reserve for your business or for yourself. So I'm moving fast. My next slide is around valuing your work. And what I've seen just in observation with talking with creative, because you like this a lot, because you think that your work value isn't, or you're not as big, or you don't have a number of followers, you tend to underprice. and it's quite common. We have emotional attachments to the work. We're sewing for our family members. We're painting this as a birthday gift for an uncle. We fear for losing of clients. They might not get referrals. Again, there's no hard and fast rule to this. You do this based on discernment and wisdom, right, as you move along. You don't have real clarity on real costs, right? Maybe you got some things free, or you got some things through grants, or you executed a project, you have some materials left for that project, you now use it for the next project, so you think you can charge less, right? You need to get this clear. Cheap prices always attract stress, and they are not sustainable even for your livelihood or for your business. This is something to consider. The next slide is on how to think about it, right? When you are pricing the two sides, it's cost-based and value-based. The cost is what we'll be speaking about. When you measure your materials, you calculate the time, you think about overhead, so that you don't run into a loss, at least break even, right? But there's the value-based, where it then gives us a two pricing lens, where you are pricing your expertise, you're pricing how unique you are, how neat your work is, how unique your designs are, how fast you deliver, and just the demand that you have around you and the problem that you're solving. So again, you may want to benchmark with your peers that you're aware of that do the same thing as you, right? Again, with wisdom, right? Value, oh, I think I do this better than this person, right? I should be able to command a certain spread more than this person's work, right? So again, when you go for, if we're using visual arts and craft as an example, you go for exhibitions or arts fairs, even fashion, you go for fairs, pop-up shows, you see where people display their work, you see the quality of their work, you see the pricing. It helps you to, again, it's real life competitive landscape of knowing the prices, how unique your designs are, and how to value, right, based on where you are. And so these are things to consider. You need to think about the cost first, so you break even, you don't run at a loss, and then you need to value yourself. So maybe a part of this session is value yourself. If there's nothing you take away, value yourself, please. Value yourself, again, within the context of your environment. My next slide is what I was speaking to with regards to calculating your hourly rates. Next slide, Adrian. What I put here is you can target annual income, or you can target monthly income, like I shared. If you are using the example of maybe you are benchmarking with somebody working in the bank, maybe earning 300,000, dividing it by number of days in a month, working days in a month, usually 22. They divide by number of hours. But if you're not thinking about it from that angle, you're just thinking, this year I set a target for myself to make maybe 10 million or 100 million at the end of the year. How do I calculate my hourly rates? You need to work the numbers. Okay, I've decided that it's 100 million I want to make. How many projects, how many jobs do I need to do to get to 100 million, right? So you have a target annual income. If I do maybe 20, execute 20, what does the cost come to, right? And then you want to be able to calculate the workable hours. Again, what this does for you is removes guesswork. So again, you need to do this at the start of the year or at the start of the month. If it's a monthly approach you want to have to this, so that for anybody that just comes in random saying they want to execute a job, you already have this framework. So for example, you already know for every painting, I need to sell it at least 200,000 naira for me to be able to meet my annual income, right? And 200,000 naira gets me to annual income. And so once you are negotiating with the person, you are starting, in typical negotiations, right, you want to start with a bit of markup, right? Maybe you start at 300, hoping the person brings you down and you negotiate down to 200,000, right? But it removes guesswork for you. Once you've done this, you need to do the hard work of computing this. It builds your confidence when you're pricing, because again, you factored in all of the costs. There's no gimmicks to it. You're not sure, and then maybe you get to the market, you discover it's more expensive, and you run at a loss. And it helps you say no quickly to unprofitable work. It's hard when you're just starting, because you just need to do it to sometimes get some experience in the space and get some customers in. Again, you have to adopt what works best for you. But as you start to grow, you want to be able to remove guesswork. You want to have a figure for every kind of product or service that you are delivering. Especially if you are somebody that is multi-talented, you paint, you sew, you sing, you want to have different prices, or you make sound beats, you want to have different prices, removes guesswork, use your confidence, helps you say no. Cheap prices can come with stress sometimes. Any comments, any questions so far? Oh, we are good. We should keep going. Are people in the room? Okay. Okay. All right. The next slide. All good. Thank you, Abigail. All good. So next slide is on mapping revenue streams, where money is actually coming from. So I put these different examples here. You want to identify, the core of this slide is you want to identify which stream is most profitable, right? Which one is most profitable, and how you know it's profitable is by the time you've taken out, you've collected money, you've taken out all the costs, and you have strong numbers left. You have good profits left. That's how it's profitable. And then you know versus which one is most draining, right? So are we doing actual sales? Are we doing custom commissions, like we've shared, consulting, design services, right? Or have we, again, grown our business to the levels where we are now licensing stuff, right? We have people then say, oh, they will pay for our design and they go and use it as franchises elsewhere, or we're now doing collaborations, right? We spoke about collaborations with Dr. Bolaji. We're now doing collaborations that earn us money. So you want to know which one is most profitable, and then you want to optimize for that. If product sales is most profitable, then you want to have a proper go-to-market strategy around this. How do we ensure that we're going to the market in the right way to ensure that I have more sales? If licensing is a lot more, then you want to channel energy to licensing. You want to be able to, again, look for collaborations, look for opportunities where you are constantly earning passive, slow, but asset ownership money, right? Because you're licensing work that you've done. If it's commissions, of course, it simply means that you know that you have to be in certain circles that constantly give you work. You have to network well. You have to have a strong customer experience, follow up, checking with people that ensures that you constantly receive more commissions and referrals, right? Similar to consulting. So again, once you figure out what is most profitable, you want to channel energy to that compared to what is most draining. You want to avoid what is draining because, again, once you have what's most profitable, you find joy from it. Sometimes it doesn't entirely give you joy, but at least it gets you to a level where you can afford to have some financial freedom for your business and yourself, where you can then say, maybe consider if you still feel like anything that is draining. My next slide is on how to price. This is personal, right? Because creatives have found out that even when even when you set up companies, it still sometimes surrounds you eventually. Some people are able to evolve and build the business such that it's more sustainable, it's outside of them. But again, most people sometimes come to you because of your craft, your talent, right? And you want to be able to think about your personal wealth from there. We've spoken about how to price, right? Thinking about labor, the time you put in. Want to consider that now you'll be paying taxes because you're a company and even as a personal individual, right? Especially if you're in Nigeria. But you also want to think about your wealth. So you want to start to add, this is a tip, you want to add a wealth cushion, especially if you know that you are not somebody, again, if you're the kind of business is commission-based, it's not regular, it's not repeatable, it's not every month. So when you have those businesses come in, you want to have a wealth cushion. It's similar to that 20% we spoke about earlier, where you set this aside, it's part of the money you charge, and you set this aside to be saved or invested. Right? So this is for your personal wealth, so that, again, you are able to have income even when you're not working. right? So you want to add a 5, I put a 5 to 10%, can be more depending on your crafts or how valuable your skills move over the years. But you want to add a 5 to 10% wealth line to every invoice, right? Of course, don't state it on the invoice. So the client is not wondering what's happening here. Am I the one financing your livelihood, your life, right? So your retirement. But you want to have it in there somehow and at the back of your mind, right? That I need to be able to think, I want to save 100,000 every month. How do I add this to this invoice? Whether it's, again, whether it's through materials, finding a way to get source cheaper materials, you need to find innovative about adding it in there. That it ensures that you have a system. Again, even if you're not thinking about your personal wealth, right? Just thinking about how sustainable the business will be, especially if it's one of commissions, right? And you have staff you need to pay for salary, pay their payroll, right, over the next 3 months before the next job comes. You want to be able to have a cushion. And that's what this does. Are we together? Does this make sense to you? Are there any questions? And then your rates must build your future, not just pay today's bills. Again, this is a bonus tip. This is just something to live by as a creative. You want to be able to have this, as anybody actually, a wealth line as you move along. And so we're going into the core of the core. Okay, it's making sense. Thank you for that, Abigail. Becoming investor ready, which is the next slide, right? Which is, I know a number of people on the call because of this, right? How should we become investors? What do investors want? I'm speaking to an angel. What are they looking for, right? Funders, what do they again, simply put, I think these 4 things. They want financial transparency. And that's where, again, the first session that we had with Bernice at the start of the bootcamp, where you have your personal account separate from your company account. They want to see clear use of funds, not inside the bank account. They see transfer to wigs by so because you bought a wig out of the company account. They want to see evidence of demand. They want to see those invoices. They want to see that they are paid for in the bank. They want to see that there's an ability to scale or sustain. That is, you have presence online, you have presence offline that ensures that you can attract customers and they will pay, right? That's what this slide is all about. It's as simple as this. Just think about financial transparency, how clean are your books, and how can you sustain and scale. The next slide, again, for those that are part of the bootcamp and are not joining in, you get this as a benefit. And we have shared this folder where in the folder we have a couple of templates, different spreadsheets that you can use. I hope we are using them because these are useful, right? I've called these essential financial toolkits, documents that you should have just on your own. And because we have some of those templates, you can use them. You can download them or you can use the simple profit and loss. You don't need to be an accountant. You will see from the template sometimes they're all aligned where you put in income from the customer, outflow, payroll, right? It's very simple. You want to be able to track inventory. Inventory simply means your materials, what you use, work in progress, tracking. Then cash flow projections. Typically, most people start from cash flow. Right? How do you manage over the next 6 months or 12 months? What do I need to pay for? Do I need to pay for rent? Do I need to pay for power? That's how to, again, have this. Investors want to be able to see this clearly. You might not have an audited report, you might not have an audited whatever, but they want to be able to see that, excuse me, even if they go to your bank account, what you've put down aligns, right? You are able to match that. This money came in from these clients and we paid payroll over the next 3 months from that money, and then we paid for electricity, we did this, right? Project or collection budget as well. Things that they want to see that you have clarity as to how to execute things, how to scale the business. I think these are the 4 basic things that you should have or documents you should think about. It's not too deep, not too serious. It can just be all in one sheet where it needs to be, an investor needs to be able to see those numbers and be able to say, okay, if we add $100,000 into this business, if we add 500,000 into this business, we can see where what needs to be plugged, the gaps that need to be, maybe they need more inventory to be able to get more projects, or to be able to cover more staffing, or hire more people, or cover more payroll. And then it means that they can move from, if it's fashion, they can move from maybe 50 units every month to 1,000 units every month. They can rent a bigger space. We just simply want to see simple numbers that help to make decisions as to how to invest best in you. And next slide is on red flags, because again, most people always ask this question, so what will I do? Because sometimes, again, investors are busy, they don't have time to respond to everyone. You just don't hear back from them, right? And so it's important to know the red flags before you reach out to them. What I always advise is, please prepare before you go to an investor. Don't be in the state where you are not sure of what you are building, such that you get on a call. This is something I've seen recently. You get on a call, pitching a certain idea to the investor, and then the investor says, "Oh, how about you think about it in this manner, or from another angle," right? And then you instantly switch and say, "Yes, oh, that your angle is best. Yes, can you fund that your angle?" It just shows you're desperate. And to the investor, it just shows this one is not ready to scale a business, just wants to collect money. Sometimes, of course, the investor's idea maybe is superior, is strong, but you want to be able to say, okay, this is something that we can scale into. I see where you're coming from. I see your points, but we're thinking about it from this angle. We're thinking about this based on the capacity we have in today in-house. And that's what we're thinking about this pitch that we just gave, right? And of course, we see how we can evolve into this with your help, blah, blah, blah. But you don't want to seem desperate to an investor. And so these are 4 key, that was just, again, on the side, just because of an experience I had recently. But these are 4 common red flags, right? Mixing for creatives. You typically don't find this in other sectors, but for creatives, mixing personal and business finances, no pricing logic or unclear margins. We've spoken a bit about the pricing logic, how to think about it. So an investor knows that, okay, this is a bit, there's a structure here. They're thinking about it right. They're thinking about the materials. They're thinking about their time that they're putting in. They're thinking about this, that ensures that they have a clear margin. Inconsistent records. We have 2023 invoices, and then we don't have, the next one we have is maybe 2018 invoices. It's just not clear. Data is missing. We can't be creatives in that angle, right? We have to ensure that we're saving invoices, keeping receipts. We have records of those things, or at least our bank accounts, the company bank accounts, has good tracking of these things. And then depending on one income source, right? Again, this will vary, right? It doesn't mean that there's a hard and fast rule to this. If that one income source is scalable and is strong enough, but typically investors just want to see that revenue is diversified, such that even if for some reason there's an economic situation that hits revenue, the business can still survive. So even if you have one income source, you want to constantly be thinking as the leader of the company of how to, again, evolve that one income source into multiple income sources, right? I'm sewing. The only thing I know how to do is sew. I only sew kaftans or boo-boos. How do I evolve this, right? I still just want to only sew. And I only want to sew for a certain number of people. Can I expand and scale it? Can I have, instead of sewing just Ajire, can I sew also Ankara or brocade, just different fabrics? Can I try to meet different appetites for different clients? Can I also maybe expand it and sew, instead of just for female, maybe sew for their children, because most times women move with children, right? You want to be able to show that you are thinking, even if it's just sewing, right? You are still able to diversify revenue. It's not just one source. I hope that's clear. Is that clear, please? Okay, Christabel, let me take your question now. How do you know the percentage to add to building I'm looking at the chat room, so if you want to put something in there, that's fine. How do you know the percentage to add to building the future? I would say start with 5 to 10%, like I said already. A wealth cushion, or what I call it, a wealth cushion or a reserve for the business, right? Start with 5 to 10%, and then you can move on from there. So my next thing, as we are going into the last phase of the slides, I know it's been a lot, but this is really just advanced. I've called it advanced investor readiness for creatives, right? So what we've spoken about is just the basics before you attract an investor. And so if you finally find an investor, you find an angel, an early stage investor, this is what they're thinking about. They're thinking about systems. They're thinking about you as a brand, not just you as a talent. How does this brand change things? How does this brand create jobs? How does this brand create impact, right? What's the financial discipline here? Not perfection, because they can hire CFOs, accountants to make it perfect, auditors to make it perfect. Not perfection, just discipline. Do we have clear revenue logic, how money is made? We've talked about this. What's the proof of demand, right? Sales, commission, wait lists. Do you have wait lists? Sometimes we are pitching because you've never started, kicked off it's still an idea, right? But you have a wait list. You have people that have signed up saying, once you start, we will buy, right? Do you have and that's what wait list is about. Do you have a wait list? Do you have repeat clients? How do you treat your repeat clients? Do you have a credible growth story beyond you just being the founder? How do you see the business scaling? That's how investors typically look at early stage young companies. The system, they're backing a brand, not just you as a talent. And so I've tried to structure this conversation in a way that is simple, straightforward, it's short, and punchy, and we're going to focus on what they want and what they don't want, right? And so this is red flags. If you are fixated on just hype, how talented you are, the aesthetics, the trends, we have the best materials, I know how to source the best artists. How do we know that you know how to source the best artists? Who is the next Bonner boy? Who is the next Dialab? Right? How do we know you are the next Dr. Bolaji Ogunwo? Right? Investors are thinking about how sustainable it is. If you're fixated on hype, you might get a no. If you're pushing aggressive scaling too much because you think that's what they want to hear, you're not as authentic or realistic about what's possible in your business. You think if I say, oh, well, we're starting in Nigeria 2026, by 2027 we'll be in Ghana, Kenya, Nairobi, Tanzania. Realistically, investors know that it's not possible. And so they won't buy it. You want full control of creative direction. You don't want to have inputs. You're showing that you're not teachable. And investors they don't want to give money to somebody that they cannot typically share not again control your business, but they cannot share their opinions with. And the person takes feedback, right? Teachable spirit. They sort of run from those things because eventually we're investing in people. As much as we see a business, we see opportunities, but it's people that will get the business to where we want the business to be in terms of growth, right? So if you can't work with the person. Even you as a creative should be evaluating the investor. You cannot explain the value beyond money. Beyond the money, you cannot explain any other thing that makes people come to your business. Is a red flag for an investor. And so I've put here next smart fundraising tips for creatives. Again, the rule of thumb is you only raise money when you've seen. Sometimes, again, you have novel ideas that you have only an idea and you really need money, right? But most times you can start where you are without raising money. And you raise money to grow. You already validate the idea. You validate the concept that people actually want it. People desire this, right? They will pay for it. They show me they will pay for it. I have a wait list. I have followers demanding for this, right? I'll have somebody that's tested this product that sees it, right? So you raise for money, you raise money for growth, not survival, right? You want to see that the business is growing, not that you want to have a life, just live for today. And that's why you're raising money. Because again, raising money from any external party, whether it's even family and friends or an angel or fund investor, put a target on your back. You are under pressure to deliver returns to them and to be able to return their money back. If it's your family, maybe they forgive you and move on with their lives. But some family members don't, and that stigma stays with you. So you want to be able to, once you've raised money, you want to know that it's for growth, it's for working, it's not for chop mouth, basically. Know exactly what the money will fund and be disciplined. I will advise you start with angels before you go to microfinance banks, before you go to fund investors, before you go to any other institutional capital provider. Start with angels, your family, your friends who understand you, understand the culture, understand the business. It can even be mentors in the space. There has to be somebody that you've interacted with. It can even be your peers, your friends that believe in you. You're in the same dormitory. They understand you. They know that you will deliver. You have to start with angels that understand you and can support you. And then be honest about the risk and the constraints, because creative businesses are not typical businesses where they are day to day. Creative businesses are unique because they appeal to passion, they appeal to disposable income, they appeal to things that people like, right? Like to do, not necessarily things that they really need to do. Typically you're solving for like a want, except maybe you're providing maybe fashion, clothing, and the likes, right? But even clothing, they have sometimes various alternatives in cheaper forms. So you want to be able to be honest about all of the risk involved and the constraints. Let me take one more question. I see somebody has dropped a question. I'm trying to. Okay, let's finish with Christopher. 5 to 10% of the total profits or the total cash flow. So it should be, you want to benchmark it to the total cash flow, but knowing that it will be part of your profits. How do I explain? So if you've charged 100,000, right? And you know that 10% of that 100,000 is your wealth cushion. So again, you save it, you set it aside, basically. You're charging, you know that what will get you to deliver that work will be plus your man hours, plus the materials needed, the 70,000, for example. And then you add the spread for the business, right? Maybe 20,000, and your wealth cushion can be 10,000. Especially if you are still self-employed. If it's a business, that 10,000 can be reserved, right, for rainy days, the days when there's no business. That will serve as the buffer. Okay. Let me move on quickly. So when you're negotiating, yes, this is something that people struggle with. Don't rush to give a valuation, right? Or rush to valuation conversations, because value is sometimes subjective, and is again, it just depends. Value only really happens when cash has been paid for something. What I mean is, you only say that a fan, for example, a standing fan is 50,000 naira because somebody paid 50,000 naira for it. If somebody comes and pays 50,000 for this fan, right, it's because cash, or says this fan is 50,000 because somebody has paid cash of 50,000. If nobody pays for the fan at 50,000, maybe the fan is worth 20,000, or maybe it's worth 100,000. It is until value has been exchanged. And so that's why you shouldn't rush for valuation conversations, because they are dicey, right? It is until somebody brings a price to the table that you then say, okay, this is the value of my business. Instead, optimize for, this is how much revenue I think you can grow, and then let the investor also then negotiate with you on where you land with valuation. And please seek experts as well that can help you, advisory firms that can help you, or just friends and family that are in the financial space that can help you with negotiations, especially with the numbers. Every negotiation you do, ensure that you're protecting creative and operational control as much as possible, your IP. So let me give you an example. I'm currently working with a client now. The person is trying to raise funding for, this person in the film industry, trying to raise funding for a project, right? And so we're having these conversations back and forth with some institutional investors, asset managers, banks, and somebody comes with a term sheet. So somebody gives us an offer now. And the person says, oh, I'll give you this amount for this, for example, okay, I'll give you maybe $500,000 for 10% ownership, okay, of the entire project. That is, whatever the project makes, I own 10% on it. I own 10% of the project. For the person now, the investor now included a clause saying, I also own 10% of the IP of the project, right? And so that's a different ballgame. You are just, as an investor, you're just giving us the cash, right, for the project, to be part of this project. But the IP is a different case entirely, right? The IP, after the project is done, after we've made money from this initial project, over the next 5 years, we can find another person to sell that project to. And the investor is pretty much saying, I'm still going to be part of this. In 15 years, I'm still going to be part of this. In 20 years, because that's what IP means. Once the person has a portion or control of it, that's what it means. That's why it's an asset, right? So again, depending on the negotiations and whatever it is that you're working with or the scenario you are in, right, seek advisory from lawyers, from financial advisors to help you navigate it. But your IP, you want to protect it at all costs. You don't want somebody to have ownership of something really valuable in perpetuity till they die, right? You want to be able to protect it as much as possible. Avoid giving away too much equity early. We always make this mistake because most times at the start, we don't have cash to pay, for example, the employees, or we don't have cash to pay the advisors that are provided, or the lawyer. Or say, okay, I'll give you 1% of my company. I'll give you 2%. Once we clear this, we make this money, you'll be collecting 2%. Avoid as much as possible giving away to, sometimes it's unavoidable. Or maybe you want to put in clauses. That's why you need lawyers there. You want to put in clauses that helps it vest over a period. Maybe after 5 years, this arrangement terminates. Just you want to be in a position where you are constantly protecting the ownership of your company, the sustainability of your company, right? To ensure that, again, you're constantly making money. You'll find scenarios, or I've heard of scenarios where you find the founders leave, close down the company, and then starts another company with the same idea, with the same thing, solving the same problem. Typically, it's always because they've had an ownership problem. They've given out too much early. They don't have as much control, and they are working their asses off, and they feel there's no value being given. I've gone over time. And you want to always clarify decisions right. You want to be sure that that's what they said is what you understand and what they mean, and always in writing as well. So I think I'm almost at the end. 20 questions that you can ask potential investors. So you should have questions, right? What other creative businesses have you backed? You want to know that they have experiences in the space, they understand the nuances of the space, or they have advisors that advise them about the space. So they're not expecting you to, they know your business is cyclical, is seasonal, right? You sell more in December or in July, and then they're expecting, calling you every month, how far now, how far? You want to understand if they understand creative businesses. How involved do you expect to be? Are you there every day, or you're coming in quarterly for board meetings or just check-ins? How involved will you be? Will you be on my WhatsApp chats or checking my stories? What does success look like for you? I'm trying to rush up now. What does success look like for you in the next 6 months, in the next 12 months, right? If it's just that we're able to get customers over the next 1 year, and then maybe for some reason we're only able to offer it to them free before we then start to charge them for it. What does success look like for you? What will you be able to take as an investor? How do you support founders, especially in slow periods? Are you able to still give them more money or help them with payroll? Are you able to get them clients? Are you able to expand their reach into other markets? Do you have connections in Kenya, in Rwanda, in South Africa, where they can expand and grow? These are questions. So questions that borders on how the business makes money, how you return money to the investor, what hampers on you, your ability to make money for them, your time, right, and your mental health are questions that you need to ask investors. So you don't want to get in bed with an investor that puts you under pressure. Do we understand? Are we together? Let me take Antisa's question. Yes, we're together. Please, can you explain further on the diversification of revenue? Also, how does the talented creative difference balance between creating for career's sake and being a business? Do I understand this question? How does a talented creative balance between creative? Let me answer the second question first. I'll say that for a creative, right? If you've decided that you are building a career out of it, and you are building it on your own, right? You're pretty much running your own business. You're self-employed. That's my understanding of it, right? And then you start to hire people to support you to grow the business. If you're working with somebody is paying you, then you're building a career in it, right? You're hoping that you grow in it, build skills in it, and maybe take on a leadership role within the organization, within your creative skill, right? That's how I will. So again, I don't know that if you own the business, you're also building your career. That is, maybe, for example, you're in visual arts and crafts, you're building your skills, technical skills, and you're also, again, selling it as a business to others, right? You need to find a way to, it always boils down to time management for me. Finding time you set aside to build your skills, go to exhibitions, go to fairs, see what people are doing, look up. There's so much knowledge out there now that it's hard to say you don't know anything and you're not smart enough. There's so much knowledge out there. And so it's just being disciplined and doing the hard work. Can you explain further on the diversification of revenue? So for example, now, if you're in visual arts and craft, which I think you are, if you paint, you do artwork, right? That's what you do. That's the only thing you want to do. For example, right? How do you ensure that this thing starts to generate multiple streams? For example, is diversified. So we paint a lot, maybe typically on my own, because this is the only thing I want to do, right? I'm only able to do 5 paintings that are creatively unique and everything in a month, right? Okay, because I want to be able to attract investments and make more money, maybe I want to hire or train somebody that can do additional 5, right? Or I want to be able to find a way, maybe I typically only sell it in church, my paintings, or I need to be able to diversify the number of places or find more places, go to exhibitions, find galleries that I partner with or collaborate with, find influencers that can support me so that I can scale. If that's the only thing that you know how to do, you want to be able to expand. If you just one product, you want to expand the number of channels that you can sell it through. And you also want to be able to expand your output as well. Quality still remains quality, right? But you have more out there in the markets that people can buy. Again, if that's the only thing that you want to do. I think I hope that helps. But let me move on to, I'll still take more questions, but let me just wrap up. So we're at the end. This is, again, is a to-do for us to take home with what we'll do over the next 30 days. And I've just put 3 things here. Just pick one, right? Maybe let's use the chat box so that I know that we're together. Over the next 30 days, I'll track every kobo for 30 days. Which one will you do? Will you track every kobo for 30 days? Will you build a proper project budgets over the next 30 days? Will you test a new price confidently? That is, you wouldn't charge what you typically charge family or friends. That's okay, just help me. Or will you build a proper project budget. If you want to share with us later on after this, that will be fine. To be good to keep the community going, right? Will you track every kobo over the next 30 days to see where money is coming in from or where money is going out from? Okay, Michael is doing all. Okay now. Okay. Christabel, yes, a project budget. Okay. We have a lot of, yeah. Dollar to project budget. Okay. So please let's pick one and do this as you do all as well. Okay. Please just do it. It will be helpful to again retain this knowledge. We'll share these slides as well. But it will be helpful to, and you can always watch this on YouTube, but it will be helpful for you to have this as a takeaway out of this session. And so just my closing thoughts. As a creative, it's being sustainable boils down to, it's a financial choice, right? Don't think about it as it's just passion. You are making a choice on your livelihood or your financial freedom, basically, personally and as a company. The money, skills that you have or you've sort of taken out of this session and you continue to build will protect your talent. You don't want anxiety to kill your creativity. How disciplined you are protects your talents, which then continues to earn you money and ensures that you have a sustainable business. I hope that makes sense. A mouthful, but the money skills that you build protect your talent. The numbers give you negotiating power. If you are generating revenues of 10 million a year, 100 million a year, it gives you a stronger negotiation power with investors, helps you attract more from investors, helps you even attract investors in the first place, helps you attract certain clients. Certain people will not commission work with you because you don't, or even give you grants, for example, if you don't have certain financial work going through your system, right? So numbers give you negotiation power, basically. Investor readiness starts long before funding. Hopefully, we've seen that with what I've explained and walked us through over this session, that long before you speak to an investor, long before you start to think about an investor, the work, the readiness needs to start. It needs to start from day one. How you think about the accounts, how you think about how you price, how you think about yourself as a business, and how sustainable it is. It's even best to think about your business without investment. And then typically you always attract investment. So thank you. Thank you for joining. Thank you for this session. Please stay connected with us, follow us, engage with us. The slide, I have some appendix there with some simple templates. Those are also on our chat, they're in our community. They also get to enjoy some of the templates that we have. I believe Ejura shared some of them already. So please download those things, use them. Different templates, they have unique names, right? Burn rate. Burn rate simply means the amount you spend every month. You see the calculations and they just plug in numbers and play around with those templates. Use those tools. Helps you prepare. You're not caught off guard. Nobody's saying they're taking 70% of your business because they're giving you a certain amount of money and you're desperate. So yeah, you want to be in full control of the outcomes of your business. Thank you very much. Hopefully this was valuable. If there are any more questions, I think I've sort of taken some of them. If there are any more questions, please let me know. Anyone?
Yes, thank you very much, Fee. So I'll just quickly give a brief summary of what's been brought us through today. Please, a round of applause. Celebrate. Thank you. Thank you. Onto something from the comment section. Thank you guys. Thank you. Thank you. Thank you. All right. So Fee taught us today how to calculate our true cost. So material, time, overhead to give you a true cost. So remember, you are doing a business. You're not just a creative. You need to know the things you are spending, how long you are doing it, and then the things you are like using, like light, rent, and things like that. Then she told us not to be emotional about our pricing. Okay, so don't say, I'm just starting out. I'm scared. Let me not charge this person. That's why they say that sometimes it's not your family or your friends that your customers. They might be outside. So you do not need to be very emotional about your pricing. She taught us that we should always invest back in ourselves. So you're not spending everything on just your business or yourself or something like that. You should always learn to invest back. Then she told us to before meeting an investor, you need to prepare. So you are not going there. I'm a creative. I can talk. I can I can convince anybody. You need to be very sure what you are doing. Get the numbers right. Get your books. Get all your accounts in order. And then she told us to be sure what you. So yeah, an investor might say, okay, do this. Yeah, they have experience. They also know how to negotiate. I mean, investors have been talking to a whole lot of negotiators all their lives. So they know how to convince you to be on their side. So you need to know how to stand your ground. So don't always just go, oh yes, let me just get on this investor's good side. You just look at it and say, this person doesn't know what they are doing. Then you should always ask questions as investors. Don't just accept anything they are doing. You read it. I heard that you are great older, you tend to read the terms of conditions very much, and I understand it. So you don't just say, oh, let me just sign the document. You need to know what you are doing. So you're not selling your soul. Okay. Then you should start from where you are. So you're looking for money. Don't be, oh, I can't do this. Just start from this that you are doing. I'm earning this, I'm doing that. Let me just start from here before you like grow and scale big. And again, she said, always start with angel investors. Don't go and run to the bank and go and invest money from collect one large loan. Start from your family, from your friends, from angels. Someone is going to help you. All right. She told us about the different red flags. That there's a whole lot of sections, like a lot of things we learn today. And she talked about the different red flags that we should watch out for. Remember, on our YouTube channel, so you can always go back and watch the sections. And for our makers, we have the documents in your makers resource kit, so you can always go back and make sure to use the tools. So I have a few questions with me, and here she has been taking questions in the comment section. But I want to ask just two questions. The first question I'm going to ask is: so say you have an emergency, and you told us that we should separate it 50%, 30%, 20%, and all that. Say you have an emergency, maybe a fire outbreak in your company that month. Should we just put everything, all our resources into emergency, or should we still separate it and make sure that we invest back or something? Thank you.
This sounds like a personal wealth question. Although I know that in my session I've made personal wealth with sort of how to think about reserves for the company. I'll say in terms of emergency, if the company and you are still one and only, right? You are still self-employed, everything is still you. But even if you have a company account or whatnot. Again, because life comes first, right? The money you have is what you use to solve the emergency realistically, right? But what if it's all about you, self-employed? Again, I want to believe that you've taken note of some of the things we've spoken about. You already have a wealth cushion, you have saved. I would advise if you have a company account, you're paying yourself a salary every month, right? Or if it's per project, if your business is still very one-off based, commission based, once the money comes into your company account, pay yourself the salary from that project into your own personal account. And then from your personal accounts, we're not talking about your personal wealth, right? Where you are then advised to at least save 20%, depending on your obligation or your livelihood, between 10 to 20%, you want to have that in an investment account, not your bank account, investment account. I typically always advise, because you're not sure about what kind of investment, do I do stocks, or do I do treasury bills? Just go with a mutual fund, a money market mutual fund, where you're sure they'll give you maybe 10%, you don't lose any money, right? Unlike maybe if you put it in the stock market and you don't have the experience and you lose money, right? Because this is around personal wealth, that's how I would say it. If you've been paid into your company account, pay yourself a salary into your personal account. From your personal account, save that money, have an emergency bucket. So have 3 buckets: emergency bucket, a growth bucket, and then I guess maybe a retirement bucket, right? Emergency buckets, depending on what your lifestyle is, you've set, is it an amount that you want to be able to say, if they say today, bam, something's happening, I need, what is the amount that will take me out of this Lagos or out of Abuja? Is it 10 million naira that will take me from point A to Kafancha to live where I am, right? You need to compute that amount and say, okay, this is what I'm building first. I'm building my emergency bucket first. When I get to maybe 20 million naira, that's the amount that takes me and my family out. Then you now move to the growth bucket, right? I'm going into personal wealth a bit now, but you now move to the growth bucket, where you are now saying, oh, you're gathering assets, you're gathering real estate, you're gathering more investment pools to grow and build your wealth sustainably. And then the last bucket where maybe you now want to have a retirement or a splurge bucket where you say that bucket is where you used to, you want to travel, you want to have fun, just want to do things that make you enjoy this life, right? You're not just working to live, right? So that's how I will answer that question.
All right, thank you very much. So if you still have more questions, you can still send them in the chat. But I have another question here. So you told us that we should always make sure we have our documents ready for meeting an investor. So, but then what are some maybe non-financial documents that we should, like things that we should do? So maybe non-financial, there are things that we should have that investor will say, okay, this person really knows what they are doing. Apart from the fact that okay, you have the numbers right, you have your all the books, every single thing is working properly. What other things do you think an investor would say, okay, if you have this document, I feel like you really know what you are doing. And also, if that investor, you said that we should look for an investor that understands the culture, that understands what you are doing. So a music artist should not go and look for an investor that maybe invests in a tech company or something like that. So say you met an investor that is willing to hear you out, but does not really understand the culture. So how do you like advise that person to go around that kind of investor to ensure that they get that investment? Thank you.
Okay, let me start with the second question. Because as the investor is evaluating you, you are also evaluating the investor. You're also cutting, right? You're going back and forth. You want to say, okay, this is an investor that even though they are not invested, they've never invested, they don't understand the creative business. They're even from maybe they've all their life they spent it in food or agriculture, right? They have no knowledge. But they like what you're doing, they like your fashion, they like the music. You want to see that the investor will give you, they will trust you and will give you the opportunity to let your talent and your hard work show. And will trust that they will only come in when you really, really need them. They trust your judgment. They trust your skills, that is the talent and the work you put out there. And it all boils down to trust because we're investing in people. I don't know this person. We didn't grow up together, right? But do I trust based on the work that the person has put together? Do I trust based on what this person has pitched to me? Most angels also know that they will likely lose their money, but you don't want to be that founder or that business where people lose their money, right? Because money has use. It could have been used for something else, right? It could have been channeled into something else. So you don't want to be that business, right? So you want to be able to work with an investor that trusts you based on what you've pitched, trusts you based on the track record and what you say you want to do, and you will actually do it, right? And so again, once you are speaking to an investor, you are learning more, the person is learning about you. You can ask questions in between, like help you get a sense of how hands-on the investor will be. And if the investor will be hands-on, will it even be valuable to you, right? Will the investor be coming in every day, checking, stopping by your shop? Okay, did you sell clothes today? Right? You want to be able to manage that relationship. And again, if possible, state it out in the agreement that you sign, because you want to sign something. State it out in the agreement that you sign that you just be an observer. We can check in with you and send you monthly reports or quarterly reports, right? You can make it quite structured and professional. You don't have to make it a free for all kind of relationship, even if they are giving you money. Put structure around the money that you're collecting, because it shows that you are disciplined. And those are the soft things. How disciplined you are in engaging the investor also shows that they also take you seriously, basically. In terms of any other thing that you can show or documents you can put together, as an investor, I always like to see a strong team profile, right? Even if you are the only one, I want to see like a strong resume of the things you've done or the things you've done in the past, what the portfolio of work, just how neat and how professional, how you've chronicled it. Sometimes speak to how you would lead your business, right? It shows you just how you put information together sometimes shows how easy it will be for investors to be able to say, I trust the information coming out of it. They'll be transparent enough. if they're having issues, clients are not paying, or clients are paying, if they have a family emergency, even if they need some company support, they will speak to us first before they just channel money out of the company, right? It will just, again, the way you put things together and you are having conversations would tell me as an investor that, okay, this is someone I can trust with my money and I can invest in, because it's just soft issues like that. But I think it would be good to see a strong team profile. You, your co-founders, what you put together, what you've done in the past, and how you're thinking about the business. Your profile is important because we're investing in people. Ideas change. You can start out as, I'm sewing clothes now, I just need money to open another shop. And then 3 years down the line, you're thinking about a manufacturing facility because you are now sewing for other people that have designs. So things evolve, but you stay the same, right? It will be good to see a strong person, a strong team.
All right, thank you very much. I think you've answered all the questions. Is there any other person that would like to ask any other? I still have some questions here, but I think I should give room. So, if you have any question, you can write them in the chat box. 5 seconds. All right. I think I'll
We're
just.
good. If me, I'm tired, we're good.
All right.
I think we're
Very
good.
much.
Michael has spoken
Thank
on the behalf of the house. We are good. You can always
All
get
right.
this opportunity. Of course, reach out to us. That always help with more questions. And a number of people are in the community as well. So we always chat about it.
All right, thank you very much. So, Fiyin, thank you again. So we have come to the end of this section. All right, I'll just let me share my screen quickly so I can give the announcements. All right, so we have one last section next week. Woo! Personally, I'm very excited. I'm happy about this. So this section is panel section, market access and pitching like a pro. We are going to be having Osarome Akinzwa as our moderator, with Brenda Fashogba as speaker, Janisola Campbell as second speaker, and the Yinka Ilori as the guest speaker. Now, these people have come together and they are like very brilliant creatives, very brilliant founders, very brilliant investment principal. And then we have Inka Ilori, who is a British Nigerian artist and designer. Is the one that recently designed the flag that they use for the recently global summit that they had for sports. And then I think this section is something that everybody should be a part of. We're going to have a whole lot of people joining it, so you can scan the QR code or use that link to be a part of it. And then you can follow us for more updates with our link tree link here. Just scan the QR code, follow us on social media. I would really love to see more of that. So please follow us along. Our YouTube link will also be found there, and every other thing that you need for understanding what RegalStone is about, you can find it in this link. So thank you again, and
Okay, the last session is the last session for the boot camp, for the 4-week boot camp. Please be there. Join us. That session, the core of that session, how we've designed it, is on marketing and pitching. So in the room, it's in 2 segments, right? We'll have the guest speaker, Inka Ilori, speak to us and share with us how he has grown his brand, how he has pitched to global brands to get international collaborations, how he has gotten to become an internationally acclaimed African as a designer, right? So we've shifted your mindset, show you about money, but we want to be able to see yourself away from the local or your close environment now, how you can scale your business and think about your business in another market. If you're with the sort of the sectors that we've picked, visual arts, fashion, interior design, they are all sectors that are export facing. And that's a core of this bootcamp. We picked sectors that are all export facing. Animation, they are all export facing. They are sectors that you can take your craft to anywhere in the world. Your craft can find itself in anywhere in the world, right? It's not limited to where you are in Nigeria or Kenya or wherever. And so it's important that that session needed to happen as the last one, where we're teaching people how to think what the investor would ask you when you're pitching. So please come with questions. If it was a grant, if it was a commercial investment, if you're in a program, right? How you will be evaluated in terms of pitching, and then we then have a guest speaker that will speak at the end 30-minute session there about sharing about his experience as an entrepreneur, designer in the space. So you don't want to miss it. It's the last session. And it will be good to have you there next week. I've said the notes, and Adrian has said the notes. So bye-bye, everybody.
So that's comes to end. Thank you.
Guys.
Bye.
Bye-bye.